Well, hello and welcome to Jazz After Dark. How you doing tonight? If you don't know, it's a show where we just kind of hang out, share a drink with each other, and I'll teach you something new, maybe. I'll tell you what I'm going to teach you tonight. Do yourself a favor. Find you some of this. I actually got this as a gift. It's been a little bit. It's really good. I don't have it often, but this is phenomenal. And when they say you taste the spirit of the Roaring Twenties, yeah, you taste it. I mean, I don't know how to tell you that. You get 10% Armagnac from 1928, 1941. It is so good. I don't have a lot because I feel like it's pretty pricey, but um, ooh, you will not be disappointed. This is one where if I could like give it a 10, 10, right? We did it. We gave it a 10. You're not supposed to give things a 10. Give them a little room to grow, but that's phenomenal. Hey, we're going to play a game tonight. The question is whether January will finish positive or not. You know how we kind of finished off the 2024 last couple days, no Santa Claus rally, and we just kind of sold off first day of 2025, which was the second calendar day, down day, and then all of a sudden, yeah, we kind of made our way back last week. But is that normal for January? So one of the things that I share, and I'm going to play a game with you and answer that question, but I'm also going to try to screw you up a little bit too and show you how you can make data look however you want if you're looking in different categories. So we'll play along here. Let's see. All right, so here's something I share with clients every month. I put it in our Notes from Jazz email. It's just a weekly email I do to give everybody updates that, I got busy, had life and stuff. And I break it up into two ways. I always say the last 10 years because we've been in this sort of volatile, if you think through COVID and then our latest bull market, the rally before COVID, it's a little different scenario. It's been an, outperforming, generally speaking, type market. So the green line, what I did is, if you're not familiar, we take every single calendar day of the year. And in fact, we're doing this 15 minutes at a time just to make it a little more detailed. And we're saying, all right, average the first 15 minutes of the very first calendar or trading day of the year. All right, average the second day every 15 minutes and the third day and so on and so on. So this is kind of what we call an intra-month chart, really hyper detailed. But you can blur your eyes a little bit. What we're trying to do is say, hey, the last 10 years, what does January do? Like, what's the general flow of it? Is it straight up like a rocket ship or whatever? And we're using the history of the last 10 years. So there's no opinion involved in this. Now you can see that the first couple days of the year tend to be a little bit wild with a little bit of a pullback, as we did see. And then the rest of the month mostly makes its way higher. Average gain there of exactly 0.83%. Cool. Well, if you look at the last 40 years, much better data set, right? That's the lighter blue line in the background. Well, January does have a little bit of volatility in the beginning, but ultimately stays positive and never averages a pullback, a negative pullback throughout the year. So it doesn't, or throughout the month. So it doesn't turn negative. And I just realized I made this whole stink about how good this is. And oh, dear, blessed, beautiful Lord. That's a treat for me. And that's it. I'll have that because I don't want this to go away. I want this forever and ever and ever. It's beautiful. I'll shed a tear. Oh. Anyways, so looking through 40 years, we have a much smoother performance, right? It's because we're averaging a larger data set, no different than if you're doing this with, widgets that you sell at your job or anything else. And so average performance 1.4%. So 1.04%. So we look at this and say, all right, well, January is historically, in many different variations here, it's a positive month. We may not get it this year, but on average, we can expect January to be a positive month. Well, that's pretty exciting. Let me screw you up a little bit here. Can we screw you up? Because I know some of you are thinking, well, yeah, but Dustin, let's look and see, how did January's do following such a really strong year, right? Or let's take every one of those out and just look at that little subset and see what happens. All right, cool. If we look at the dark blue line here, what if the prior year, which we just had, was up 20%? So we were up over 20% last year. We say, well, let's only look at those years. Well, over the last 40 years, 40 years, we have 13 times that's happened. Well, now look at the intra-month performance of January. It gets a little weaker. right? Not horrible, but it gets a little weaker. We also see that the first couple days start off weak. There's a rally. We just had that, or we're in the midst of that, right? A little bit of sideways there, and we average a pullback almost towards the middle of the month, a fake rally, and a sell-off towards the end of the month that tries to recover. The average performance now is nothing to be scared of. It's really just showing volatility. Average performance about a loss of 0.25%. But wait a minute, all this looked so good, right? Well, if you want to look at years that were most similar to last year, right? Great question. We find that it's not as exciting. I added in here, what if December was down? Because, we lost like 2.8% or so in December. It wasn't a positive month. Well, when that happens, we have a recovery, right? 1.79% on average. There's only 10 years where we had a down December, and we can look forward to January and see what happened. Notice that's wildly different, right? Depending on how you want to look at it, depends on how you perceive what January will perform like. Now, I'm hoping for the dark blue line. Personally, I want this one. I want to see the markets pull back. I've got some cash I'd like to put to work, and I think a lot of you probably do as well. So very kind of fascinating how I can just, we're going this way. Oh, nope, it's going to be positive. Careful. Now, this goes to other things in life too. When you're scrolling through a news page, whatever your favorite news, Wall Street Journal, CNN, Fox, it doesn't matter to me. They all do the same thing. You're going through and you read a headline. Let's go political for a second. Trump blasts this person or whatever. And you're like, he got him, What really happened? It's in the headline to get you interested. Then underneath of it, you go, he made a prank phone call and it was a joke. Not that that's happened, but you get what I'm saying. So the same thing with data. When we're looking at data, we can go different directions. And I could have made a video that said, January is in trouble. Right? And then just focused on this. Like, we had a 20% gain last year. Look at all Januaries when this happens. Oh, no, volatility. That's not fair. I like to share all the data with you here so you can make your decision. I'm this guy. So if I had to pick one, I'm that guy. I think we had back-to-back 20% years, and I didn't run that study, but I think that this month will be more volatile because of that. Now, one fun one before we go, because I got my fun favorite drink here. We're going to do a fun one. Have you heard, this is not the most timely information, but there's a thing where people say, first of all, they say, as January goes, so goes the year. It's too early for that. We don't know how January is going to go. In other words, if January is down, the year will be down. We're going to show that data and talk about that. But what's going on right now is the first day of the year, up or down, sets the tone for the month and for the year. Does it? Meaning, if January, in this case, the second day of January, which is our first available trading day, if it's a down day, January, it's a bad omen. January is going to be weak, or the rest of the year is going to be weak. So I thought, is that true? If January, the first day is up, does that mean the rest of the month is up? And if so, how often does that happen? So just for fun, let's take a look. This is focused on just January. If, you can see it. So if the first day is down, and in this case, it was a down day, the rest of the month averages, there's 37 occurrences of this, 1.5%. Okay, sounds fair. Compare that to if the first day of the month, the new year, is up. Do we get a positive month? Yeah, but it's not as good as if the first day of the year is down, right? And then you go, there's 37 times, and that's your average. There's 35 times, that's your average. Let's see the percentages. Yeah, you could see it. So if we're down on the first trading day, 62.2% of the time, you'll get a positive return, average 1.5%. If we're up on the first day, you get a lower average return. Granted, it's positive, but it's only positive 51.4% of the time. So would you rather have a 62% chance of making an average of 1.5%, or would you rather have a 51% chance of making less than 0.5%? See what I'm saying? We're cool with it being a down day, which we had. So that's fine. Down day. Now let's look at the rest of the year. This is interesting. I said average, by the way. This is all median performance. I think I said average like 5 times there. So median, 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 median. All right, so now we're going to look at the rest of the year because the color changed up there, so we know something's different. If we're down on the first trading day, which we had 37 of those times, the median return the rest of the year, 9.7%. That's just a little bit less than what the average return is for the S&P over a given year, right? So, okay, still positive, it's fine. If we're up on the first trading day, 35 times, still the same 35 times, the rest of the year has a median performance that outpaces itself. So, okay, now we're working with something here, right? If we look at this, percentage-wise, I don't know why it's on this side. Let's go down here, make it a little easier. 73% of the time, we will have a positive year if we're down on the first day of the year. And it'll just be a median of little less than what the average performance is. All right, cool. If we're up on the first day, it's about the same, right? About 70% of the time will be positive. 7 out of 10 times, we outperform the average performance of the S&P 500 throughout that given year. So what's that tell you? It don't matter, right? Realistically, it doesn't matter. Up, down on the first day, everybody that's like, oh, it's a bad omen, shut up, right? It's fine. Now, take that data, the concept of that data, and go back to where we stood before. So where do you land for the year, right? Where do you land for January? I'd actually be curious to know, and I'm not just asking for comments so somehow something happens on YouTube. You now know the intra-month performance over the last 40 years and over the last 10 years, roughly the same, a little volatility difference there. And now you know if we were up 20% in the prior year, that's our negative one. And if we were down in December, that's a wildly positive one. That outpaces the normal January performance. Where do you land? Do you think we will be down in January because we had a good year last year? Or do you think January will be modestly or positive? And if you want, take a shot. I know the percentages there. Let me know what percentage you think. Let's play a little game and see what happens. Now, I do this kind of thing every month for clients because I like to let them know, like, hey, look, it's July, and historically, there's no hurry to put your money to work, so don't feel like you have to rush or whatever. A really fun one is right before the cutoff date to contribute for your IRA and Roth in April. You go, should you be in a hurry or should you wait till the last second? What's the better pitch there? Doesn't always work, but if year after year I can give data that will push you closer to the average, you're better off than if you just randomly decide. That's the kind of thing that we like to do here. And maybe that's why we were ranked the 66th best advisor in all of the United States by USA Today, which I know it doesn't sound like a high number, but there are tens of thousands of advisors in the United States, and we got 66. I feel like that's pretty good, So we like playing with data, and I can't tell you what we're working on behind the scenes right now. I feel like it'll put us in the top 10, and it won't be some software that we bought or that some other advisor can use. It's going to be our own concoction. Amazing concoction. Imagine if I could watch everything you do and stop you before you make a financial mistake. Yeah, that's what we're working on. All right, I don't want to talk too much. I will keep it a secret. Thanks for watching. Hope you enjoyed, and tell me, where do you think we're going to land here at the end of January? Let's see who gets closest. Adios.